Good morning, traders. Welcome to your 7-minute market update. Today is March 17th, 2013. Happy St. Patrick's Day. Um, Quite a bit to talk about, so I'm gonna try and keep this video real short. Basically, we talked about in last week's video the 157 flat level there. And also in last week's video, I said that this could have been potentially been looked at as a short. However, the volume wasn't substantially higher than I'm sorry, was this volume here wasn't substantially higher from this volume, so it wasn't really accredited. However, it was on a technical basis a short trade as far as I'm concerned when it comes to my rules. However, it happens. I fortunately didn't was unable to take this trade, and I would have been stopped out by now. However, I did say after it does pass this 155.44 level, we would head towards the 157 level. Last week was the week that options expired, so we would have a lot of how you say things that you should expect the unexpected kind of thing. In any case, we come close to the 157 flat level and we already start pulling back. In fact, the highest we got was, I believe, 156.80. So we were 20 cents shy from the 157 level. If we get into the 157 level on Monday, which is tomorrow, and we do it on high volume, then I may consider taking a trade. Now, this is where I become wary about taking a short trade now. The simple fact of the matter is, on this day here, we had higher volume, okay, which was pretty good volume, and it was higher than the past 3 days. So that could be considered also as a short trade as well. In addition to that, it was already close to the 157 level. However, the next day, which was Friday, validated that continuation of a move down, which was indicated by this higher volume of the previous day. Remember, when volume continues up this way, I shouldn't use those two candles because that was not where it belongs. These two candles, it will validate the move that it's heading towards, and that's heading down. For me to take a short trade now, however, would be premature. There is a possibility that we may get an additional pop on Monday, because Monday is normally a lower volume day in consideration to the rest of the days in the week. If that happens, however, to hit the 157 level, I may consider, depending on the pattern, of taking a short trade. So just to make a long story short, I am still on the sidelines. I haven't taken a short trade just yet because of the signals just not lining up. It just doesn't make sense right now. So what we want to do is take a look at the dollar. Alright, this is a chart of the dollar futures. As you can see, the futures have been pulling back, but the markets are still showing some weakness as well. So that kind of tells me a little bit about this market right now, showing a lot of weakness, in that this so-called rally is probably not going to last very long. I know I've been saying that for a while, but it really does seem like the case. Let's take a look at JP Morgan to get a better idea. But let me see if I can zoom out here. Alright, this is more like it. This is a chart of the UUP. My US dollar futures won't let me see too much history. In any case, what we did have is, and again, as talked about in the previous videos, that when I last talked about the UUP, we were going to see some resistance here at this gap fill, and that's exactly what we had. As this guy came down, the market should have climbed higher, and it did. But we're now into more support here on the dollar, and we should considerably see a bounce here for another push higher. In fact, we have the 200 moving average right below that with this pivot point. So I think if I was to go long on the dollar, and I normally don't trade the dollar, I would wait for it to hit here. If it does hit here, then there is a potential that we may get a pop on the dollar, which will drive the markets down lower, because as we all know, the dollar is opposite from the market. So this is pretty much all there is. I mean, it's pretty simple to see. There's some confusion, I guess if you will, in the indicators, I should say. In what the market could potentially do next week. It was a hard read for this week, simply because this week is, I think it was a triple witch expiration or quadruple witch. could be the potential. And if that was the case, then you're going to see a lot of manipulation, especially for this month's options expiration week. And so we should take into consideration what this next week does, and not and leave behind what last week did. Since we have some time, let's take a quick look at the SPY weekly chart. And what I see here on the weekly chart is that we barely hit the 157, obviously, as we saw in the daily chart. We created some sort of a spinning top candle, and again, it's not on substantial volume. So even on the weekly, it's saying, hey, there's a potential that we could actually go higher. How much higher? Well, that's probably what is on everybody's mind right now. If you look at the high of this candle here, which was back in 2007, that was 157.52. So there is a possibility that we could get all the way up to 157.52, or is that? Let's just make sure. All right, 157.52. What I'm going to do is I'm going to draw a line here at 157.52. I'm going to make this line a totally different color so nobody thinks that it was a mathematical calculation. I'll make this a red, and I'll go 157.52, and we'll see if it reaches that mark next week. And the high of this candle here was 155.75. So yeah, the highest from 2007 will definitely be with the 152. Let's go back to the daily, and there you have it. So what I'm just going to save the drawing, so for next week's video we'll get a quick look. I have a feeling that I'll be making a video sometime in the middle of this week in case I do decide to take a trade. But yeah, we hit the 157 level. Depending on the pattern, I'll most likely consider taking a trade on that. But in any case, this is probably going to be one of my very short videos. If you guys like my videos being this short, please hit the like button. If you rather have me make longer videos, then just let me know in the comments. I've gotten some responses saying that my videos may be a little bit too long, and it may be a little hard for viewers to sit through such a long video being half an hour. So I'm going to cut these videos as short as possible. I'll get to the point as soon as possible, and the point being that we're going to get some support here at the 154 level, and we're going to get some resistance at the 157.52 level. This 157 mathematically calculated level, I wouldn't trust it too much, simply because it's already come close. It's about 20 cents away from it. The high was 156.80. So I might be wary about taking a short trade on the 157 because it almost got there and it already pulled back. So again, once it's hit, I don't consider it a valid line, but we'll see, and I'll definitely make a video midweek if I do decide to do anything about it. Alright, so you guys have a good week. Have a great weekend. God bless to you all, and good luck to your trading. And I hope to see you in the next video.